take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss. I don't even know what it costs. Yeah, I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year.
All right. Good morning, everybody. Happy Thursday. Hey, happy Halloween. Welcome to the morning show here on Stock Market TV. Mr. Israel, JC Parets. No Strazza today. He'll be back tomorrow. We do have one Ed Clissold joining us today from Ned Davis Research. He'll be on at 9. We'll have Mr. Glick. We'll have Mr. McLaughlin. And that's the rundown. We'll talk Microsoft. We'll talk Meta. We'll talk Uber. And we'll see. Well, maybe talk more SMCI, maybe, because it's just too much fun, right? So that is the rundown. Let's get the show on the road, and let's see what happens, all right? It's one of those days.
All right, Spencer Israel, we are back, baby.
Hey,
happy Halloween, my friend.
Happy Halloween. And congrats to the Dodgers. I am very tired and did not go to the game last night, thankfully. I'd be even more tired. So
what are you dressing as for Halloween? Are you going to be Cinderella again?
Yeah, every year. No, this is actually, I said this, I think, a few weeks ago. This is going to be the first time, I think, really in my adult life that I expect to have trick-or-treaters in my house. I've never really had them before, so I'm very excited for tonight.
So years ago when I was living in California, I lived in a residential neighborhood, and my wife was out of town for work or something like that. So it was just me on Halloween, and it was my first time that I had little kids trick-or-treating in my house. So I was like, oh, let me just scare them, because that's what you do on Halloween. Whoa, bad idea. I went in there, and I put like the flashlight on my face. I scared the crap out of these kids. Nobody came back the rest of the night.
Oh man!
So,
all right. I'm not gonna do that. But
I overdid it a little bit on my first Halloween. So the advice that I would give you, Spencer Israel, is the idea is not to scare the crap out of these kids.
Yeah, I haven't trick or treated obviously since I was a little kid. So I almost like forget what it was like. It's been so long.
I used to love Halloween. Now I have twins, and they were born on Halloween. So happy birthday to the twins, turning 2 today.
Hey,
so Halloween
happy birthday.
is even more special.
That's a big day. Wow, and congrats to Billy's daughter's first Halloween as well. It's a lot going on today for people. We got a Halloween and a double Fang earnings day, or not Fang, double max 7 earnings day, right? You got the Amazon tonight. You got the Apple tonight. We're doing our little stream with Jeff Mackey at 3:45 today. We got the trick or treating. We got to give away some candy. You got a lot going on.
Before we get into the state of the markets, throw up that slide 2 there for everybody.
What's this?
Throw up that slide 2, ladies and gentlemen. We've got Jeff Mackey tonight. You can listen to the conference call on your own if you want, if you're into such things, or you can have the best in the business giving you the color commentary in real time. We'll see you there at 3:45. Spencer, you want to drop the link for people to join us?
I most certainly do. If you want to get the recording as well as a nice little preview we put together, and we're going to send out a nice little post earnings report later on today or tomorrow. Only way to get that is by going to the link in the chat right there. So check it out. See you guys later.
All right. Little state of the markets.
Yeah, let's do that.
All right, ladies and gentlemen, we've got the Dow futures down 200 points this morning. That's about half of 1%, 42,160 for the Dow. S&P's down 0.2%, just above 5,800. The NASDAQ 100 futures down 0.75%, 20,400, just below that, with the 30-year bond futures down 0.33%, below 118 for 30-year bond futures. The selling continues. Crude oil bouncing back, up 1%, pushing $70 once again. Copper up 0.33%, 436. Gold down 0.5%, 27.85. Silver down 1.25%, about 33 and 33.5, with the volatility index 21.25. Spencer Israel, 21.25 for the volatility index. Meanwhile, we've got Bitcoin flat on the day, 72,100. Ethereum 2635, down almost 1% on the day. Solana flat at 175. Binance down 1% and change, 587. Total crypto market cap, Spencer Israel, 2.37.
Okay.
2.37 trillion. Didn't mean to scare you, but
I was going to say.
Bitcoin dominance now above 60% for the first time in 3.5 years.
I knew Bitcoin was having a good week. I didn't know it was having that good a week, but yeah, good stuff. Good stuff. Do we want to start with the earnings from last night?
Yeah, talk to me about the earnings from last night, and then I got a chart that I want to share.
All right, let's start with where do you want to go? We'll go start with the Meta. Let's do the Meta first. So Meta, which as I have the Microsoft chart up, but Meta this morning, yeah, it's down. It's off the lows, but it's down. A little bit here. The numbers were good, right? I mean, more or less in line. It was not like a huge beat like the Alphabet was the other day. But the revenue came in above estimates. The EPS came in above estimates. The guidance was more or less in line. The estimate was at the mid range of the range that they gave last night. So I mean, it wasn't like a blow off top. Like they didn't crush it, but they did good. They did good compared to what the analysts in quotes thought they would do. The reaction is kind of muted to indicate that it wasn't like a blow away quarter or anything, but certainly it was nothing to sneeze at. Revenue up 19% year over year. Daily active users. Well, where is my daily active users note? I have it. Where's my AI? There it is. Daily active users. Up only 5% year over year. 3.29 billion across the family. That's the Facebook, the Instagram, and the WhatsApp apps there. That's pretty much all I got. So, like I said, it was good, not great, and I think the reaction is kind of indicating that as well. So that's what I have to say about Meta.
Throw up slide 3, Spencer, please.
Meta AI is reaching 500 million monthly active users. Holy crap!
500,000 monthly active users.
Now 500 million.
So 500 million active users every single month.
For Meta AI, yeah.
I don't know anybody who uses it. So
I mean, we might use it without even knowing we use it. You know what I mean?
Let me ask you this, Spencer Israel.
Yeah.
Because every time I tell people that large cap technology has been underperforming for most of the year, and small cap technology has been underperforming for 18 months now, people look at me like I'm crazy. They think I'm lying to them. They ask me what underperformance even means. Am I crazy? I mean, are other people not like calculating the underperformance from technology? Like, is this not common sense? Like, why do I feel like such an outlier every time I bring this up in front of a group of people?
Well, they're definitely not looking at the bottom line. I can tell you that. I don't know anyone. I mean, I guess that's not true. It's not sexy to look at the bottom line, right? The
not
small
sexy
cap
to look at small cap technology stocks. Aren't those the sexiest names?
No. Because in the grand scheme of things, does that really matter, JC? Like, I'm asking like for me at this right now. And the grand scheme of things, does small cap tech underperforming the S&P 600, does that really matter, or is it just interesting?
Well, when the only way to make sure that you own the best stocks is to buy the best stocks, right? And technology has not been that. Technology was somehow down in the third quarter. I don't know if you realize this. Last quarter, technology down in the third quarter with everything else up double digits. Then technology started out Q4 with a flat September. So a down Q3, a flat September. Let's see how they finish up October. And then small cap tech just underperforming for 18 months now, just straight down. So when I tell people, when people are like, oh, well, SMCI is getting killed, JC. Yeah, well, SMCI was down 70% before yesterday, right? Like,
I would also add that the stocks that we're looking at this morning, right? Meta and Microsoft, well, Meta at least is not in the XLK, right? So
That's right.
it's not a perfect measurement here, right?
Well, we know that none of these measurements are perfect, and we know that going in. Why don't you throw up the slide 4 here? And this is the index that Meta is in. Meta has a 0% weighting in the S&P Technology Index. Fun fact.
Yeah.
And it is the largest component of the Communications Index, which is making new all-time highs. Right? So there's a difference, right? And by the way, communications, best performing sector for the year. They were the second best performing sector last year behind technology, and this year best performing sector ahead of utilities, by the way. I know utilities are cool now and all the kids are trading utility stocks, which is hilarious in its own right. Communications outperforming utilities, outperforming financials, and some of the other leaders. Does that surprise you, Spencer?
Well, knowing what I know about Meta, and I know because I'm a shareholder, that no, it doesn't really surprise me.
And Google too, right?
And Google, this is a very top heavy sector. I mean, it does a little bit because, like, as we've said previously, this sector above all else is kind of like just a crap shoot. It's like Meta and Google, a bunch of like shit, basically. You know what I mean?
Netflix,
like,
is that shit?
No, but like telecoms are in here, right?
Yep.
And like
you got Verizon, AT&T, which have also been doing well. You got Walt Disney.
Like Disney and like Snapchat's in here, and like a bunch of like Pinterest is in here, and a bunch of just like not good stuff. But look, it's so top heavy that, you know, if Google and Meta are going to outperform.
Go to the new slide 5. So if you have a problem with the top heaviness here.
Yeah, here we go. The equal.
Look at slide 5. So here we're looking at communications on an equally weighted basis, making new multi-year highs as well. So this eliminates the Google and Meta effects. And as you can see here, we are well below the prior cycle's highs when you equally weight communications. However, above that anchored VWAP from those highs, making new multi-year highs and moving forward. So, you know, when you look at communications as the best performing sector of the year on an equally weighted basis, acting well also, huh?
Yeah. I mean, I'm not arguing with you. It is a fact. I'm not going to argue it. But like coming into the year, would I have said that? Like, probably not, right?
That communication would be the best performer.
Yeah. Right. I probably wouldn't have said that.
All right. And then finally, I wanted to finish up with slide 6 here. And then this is the big one for me. So we're talking about Amazon after the bell today. Amazon, the largest weighting in the consumer discretionary sector. Again, not in technology. Amazon, a 0% weighting in the S&P Technology Index. So when you look at the holdings of the consumer discretionary index, Amazon 22%, Tesla just under 15, with Home Depot at 8. Those are the top 3 holdings. And when you compare consumer discretionary relative to the rest of the market, this is a potential massive 10-year top in consumer discretionary, like massive. And this isn't the here. Can you why don't
there's green arrows on this chart.
Here, why don't
we be red arrows?
This? Go ahead, replace this with the other one. I just switched it so you can see the top there. What were you saying, Spencer? I'm sorry.
Shouldn't those be red arrows, not green arrows?
No, those are green arrows. It's the top, right? The green arc on top, because it doesn't necessarily mean it's bearish. Actually, quite the opposite. A lot of what we've seen out of the leaders in this bull market is these massive tops, these potential massive tops, don't turn into that. And then you see the ripper. And I got to tell you, if this is a massive 10-year top in consumer discretionary relative to the rest of the market, then bull market over. That's it. Period. There's no questions asked. This is a consumer-based economy. We're looking at consumer discretionary, arguably the most important sector in America, but it's definitely in the conversation, whether it is or whether it isn't. If this is a massive top, 10-year top in discretionary relative, it's over. Bull market ends. I don't think the bull market ends. I'm not seeing enough evidence that would suggest that it's all over. So if that's the case,
why is that the case, you think? Why is that the end of the bull market for this, if this specific sector starts
Right,
underperforming or
consumer
continues.
discretionary, completing a massive 10-year top relative to the rest of the market is very characteristic of early on bear markets. Certainly not bull markets. These are consumer discretionary is the group that you need to see leading in bull markets. Consumer staples are the group you need to see underperforming in bull markets. Right, when stocks are under pressure, when there's stress in the market, you're going to see consumer staples outperforming. As it turns out, just yesterday, you got new all-time lows in consumer staples on an equally weighted basis relative to the rest of the market. So you're seeing continued underperformance from staples. You're just not seeing that dramatic outperformance from consumer discretionary. So that's what I would be watching.
All right. Look, as we're talking about, this morning already, and sort of yesterday and every day, these characterizations, the way the market is sort of organized are not perfect, right? But it's all we have to go off of, right?
What is it that's not perfect?
Well, I'm just talking about just like the sector breakdown, right? They're not perfect, and these stocks that are in these sectors are decided by an organization somewhere, and that categorization isn't perfect. And the stocks that are in the S&P 500, right? Just because they're in there doesn't, like, as we talked about with SMCI, it's not necessarily a good thing, right? If the stock gets added to the S&P 500, so I'm just I just try to remember that like this is not, this system of measurement and organization we have is not perfect, but it's all we've got to go off.
Yeah, there are a few different ways to look at it. You could look at the New York Stock Exchange Technology Index, for example. So I'll throw it up here for everybody to see that. So this is ticker symbol XNTK.
And that's every tech stock that trades on the NYSE.
So this is so this is 5% Nvidia here. I'll throw it up. I'll throw up slide 2 here.
It's all subjective. Every index is subjective except for the equal weight indexes, obviously, right?
What's not subjective is the way the market treats it, and that's what we're really interested in. So Nvidia, 5% of this index. You have that there. There it is. Nvidia, 5% of this index. Broadcom, 4%. Taiwan Semi, 4%. Then you got Meta. So you see, in this case, Meta is on the New York Stock Exchange Tech Index when it's not in the S&P Tech Index. Netflix also on the New York Stock Exchange Tech Index. Oracle, Alibaba, Micron. Because remember, the New York Stock Exchange has international companies as well. So you're going to see Alibaba, Taiwan Semi as some of the largest components there.
Yeah. What about Microsoft here? Well, let's talk about that. Microsoft is down 3.5% this morning on their report. Again, it's kind of the same story as Google, right? Fine, right? EPS beat, revenue beat, guidance was in the range, right? Of what the street was looking for. What do they say about their cloud growth?
Yeah, throw up slide 2 there.
Because the cloud stuff is always interesting, as we discussed yesterday. Where's my data? Here it is. Intelligent cloud revenue up 20% year over year. And that was operating income up 18% due to or despite a decrease in gross margin percentage due to their heavy investment in AI. What else do they say about AI? The AI contributed 12% of the overall cloud revenue growth. So but that was interesting. And this is also, I think, the first one of the, maybe the first or second quarter where they had the Activision fully in the company.
The reason I wanted to bring this up is because Microsoft, notice how it's above those prior cycles highs, right? Nvidia above those prior cycles highs, and then throw Amazon.
Yep.
Look at Amazon, not above those prior cycles highs. So when you see Google already above it, Meta already above it, Nvidia, Microsoft, Apple, go to the next one, Spencer. When you see all of these breaking out above those prior cycles highs, when I look at something like this, when I look at something like Bitcoin that looks exactly like this, I lean towards how did the other ones react, right, Strazza? Like, oh, I like the Halloween on the names, like the spooky names.
Oh, you just noticed that?
Oh, I just noticed that. Happy Halloween, Mr. Strazza.
Happy Halloween to you.
We are talking technology. Throw up that slide 4 one more time for everybody to see. Strazza will be joining us
Wait,
today.
hold on. So is this bullish though? Is that because
So Spencer, Strazza will be there with us today, and Jeff Mackey, the legend that is. We were hanging out in San Diego last week. Will be joining us as well today at 3:45. Talking Amazon earnings. I'm the technician, right? I'm going to be looking at the price. You know, that's how I roll. I have a funny feeling Steve Strazza is going to be asking Jeff Mackey questions that I would not be asking him.
Yeah, we're going to get into
anything
it.
Specific out of curiosity that you're already like looking to ask?
No, I got to do some homework first.
Mm-hmm. All right. Like, I want to know about like the AWS stuff and like what percentage AWS is of the whole thing. Like that's like me as somebody who's dumb and like knows nothing. Like that's what I'm interested in.
Yeah, we'll obviously talk about that, the different revenue centers. It's AWS is really what matters for their business.
Does it? Why? Because Mackey was telling me that their retail revenue is really not that much.
It's where the growth comes from, the cloud. Yeah.
That's what he was telling me the other day.
But I care more about like these big techs, like how much money they're spending building out their AI infrastructure. So they're all starting to report that now, and it's absolutely bonkers, these numbers. I mean, we're talking 10, 15 billions of dollars a quarter for these big cap techs. So that's interesting.
Spencer, what were you asking me?
Wait, if you go back to the Amazon, which is not above its prior cycle highs, are you saying there that like, hey, here's a catch-up trade, here's a potential catch-up trade?
For me, it's less of like a catch-up trade and more like they better step up now. It's now or never. If they're not going to step up and buy consumer discretionary now, I don't think they're going to do it, right? I mean, it's literally now or never. I got one more, though. Down 10% on the day, Uber, slide 2. Strazza, any thoughts here?
Yeah, this is what I want to talk about. First, just want to comment.
On 8%. 8%.
Yeah, we'll get right. 1 second. I always have like a favorite Mag 7. Like I'm just forever buying these companies for the long run, all of the big ones. Right. And I'll look at the valuations. I'll look at what's going on like quarter to quarter. And right now, Amazon is the cheapest. It's the most actionable. It looks the best. Everything's all good. Right. Like for whatever reason, you get this rotation within the mega caps and even the Mag 7s. And this one's just lagging behind right now. And I think this is the earnings report that'll act as the catalyst to give us a big breakout to and through those prior cycle highs.
Yeah. Like it's kind of rare for all 7 of them to be outperforming at the same time. Right.
Exactly. But usually like one's really working, one is really not working, like Meta and Tesla last year, right? And then some are kind of just moving steadily higher. So Uber is a special situation. The stock cannot go up after every earnings report. But if you take a step back and think about what's going on here, you have 20% plus top line growth. They dominate their category. There's no one like them. They're the clear industry leader. It's an ecosystem play. 50% plus bottom. Their free cash flow is also growing. I don't know, but probably 15% there. And they're allocating more and more and more of that excess free cash flow to buying back shares. This is becoming a buyback story, becoming a shareholder return story. They're going to be reducing their share count while they're growing their bottom line at 50%. So that's what you get with Uber. Down 7% here today. Probably a great buying opportunity. I was just listening to Dara on CNBC. I hope they do buy Expedia. I'll tell you why. I hope they do buy Expedia. If he thinks it'll be accretive, he is so good. He knows that business probably as good as anybody too. But he's probably the guy to run it. So
did they talk about that this morning?
Yeah, he refused to comment. They also asked him about Tesla and automate. They asked him about basically the risk to Uber, right? Tesla coming out and competing. Yeah. And he made I thought, which was a very classy comment, but also pointed out that they're just not safe and they're not there yet. So why are we talking about it? So that was good.
That's fair.
Yeah.
All right. Wait, we have Kenny here.
But the Uber of other countries, it's okay. That Grab continues to look great.
I mean, Grab is not like Uber. I wish that Grab will someday be something like Uber. Uber is an
Grab is a
absolute powerhouse.
$16 billion market cap. It's an Asian Uber.
No, nothing is
No,
Uber.
it's not.
Nothing is Uber. Like Lyft is not Uber anymore.
Hold on, school me, because the way I understood it was that Grab is I think I learned this from you. Isn't Grab the Uber of Asia?
It's ride hailing.
Singapore?
Yes. But I think we need to start, and that's fair. That's what we've called it. We need to start talking about Uber like what it really is becoming. This is a future Mag 7 stock. The total addressable market for a company like Uber is absolutely ridiculous. I think
we're getting the crap kicked out of it this morning.
It's down 7%.
It's down 7%. It's not bad. It's coming back. $165 billion market cap, by the way.
And they're now starting that playbook that like the other mega cap techs are buying back their shares. Like I just love it. There's a lot of money sloshing around there, and I'm excited to see what they're going to do with it. But Grab is, yes, ride hailing, but they're not doing the other things that Uber's doing too. Uber has this huge focus on just bringing you into their world, having you download any of their apps, right? And then keeping you in there.
How many do they have?
3.
They have 3 apps. The Uber Eats, regular Uber, and what's the other one?
There's one for regular businesses like delivery, freight.
Oh, freight. They don't have the Uber Chopper. Didn't they have the Uber Chopper? Whatever happened to that?
No. So Stellantis and what's the other one? The Toyota. Stellantis and Toyota are investing and funding the Choppa businesses, Archer Aviation.
Get in the chopper, Dana. Get down.
Yeah. Another earnings report from yesterday that's really similar to Uber in the sense that like it's good, it's fine. There's really nothing there. Is Coinbase. Everybody's just kind of sitting around waiting. Coinbase at this point, their subscription revenue business, which is new 2 years ago, is growing 50%. It's going to make $2 billion this year. Everything's going just going fine for Coinbase. But investors don't own Coinbase for this environment. I don't own shares of Coinbase for altcoins to be dead all year and no trading volumes. The first 3 months of this year, Coinbase made 10 times the earnings per share that they just made this quarter. Know why? Because altcoins were working. The earnings power potential of this business when it's a bull market, a broad bull market for cryptos, is absolutely insane. JC, you love operating leverage. Coinbase has it. Like it's absolutely wild. That's why I'm so.
Let me ask you this: are there people, Strazza, who do not like operating leverage?
They need a crypto bull market to recognize the value of their shares right now because their earnings changes that much. So they're wearing through. They're kind of weathering through this storm, the crypto bear market. But investors are just kind of hanging out and waiting for one of those big quarters like we had a couple quarters ago when the altcoins are working. Yeah, mine should be in the mail.
Zoom in there, Spencer. Let's give. I'm showing off my stock traders almanac. No big deal.
Wait, your camera's flipped. Not good. It's backwards. That's all right.
Flipped.
Yeah. There we go.
There it is. 2025 stock traders almanac. Right next to my 2024 stock traders almanac.
The good books.
Shout out Jeff Hirsch. Man,
books.
I was digging in last night. There's so many good data points in here. Seriously, he's not paying us for this, but I've been reading this cover to cover for, man, almost 20 years probably.
Can I bring Kenny on real fast?
A little jealous that I got mine.
Can I bring Kenny on real fast?
Yeah, bring him on.
I'll bet you Coinbase flip.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 problems, and I still kept it 100. Hold up. Yeah.
Oh, there he is. Dude, you're so good. You're so good. You got to unmute yourself, though.
Hey, you're on mute. You're on mute. Oh, shit.
Are you the Grim Reaper?
Well, we can't hear what he's saying anyway.
We can't hear
I'm
what
the
he's
warlock,
saying.
goddammit.
No, we can't. Okay.
That's right. He's a warlock. That's right. The warlock. Ladies and gentlemen, the grandfather of day trading. The camera's a little too low. I don't need to see that up front there, Kenny. Thank you, though. Appreciate you.
By the way, this is the one thing I got from Wish, that website Wish. I ordered it, and they sent me my money back, and a year and a half later, it showed up at my house. So fantastic.
All right, talk to me. What's on the move this morning? We got the Dow down 250 points, NASDAQ down 0.75%. Do you buy the dip, Kenny, or are you looking at some individual stocks?
Death is in the air. We're killing Carvana. Oh, we just killed Carvana. Listen, I was long this stock at 1750 with $50 calls, and I was mocked. I said it could go to 250, and today when it hit 250, the first thing I thought of is, all right, let's get the hell out of this thing. But if you're still in it from the original entry price, good for you. Fantastic. I was just looking for people to dump this stock. It went all the way to 258 yesterday. But more importantly, the blue magic line right here. It couldn't get above it, couldn't get above it, couldn't get above it. And if you were awake just about an hour ago, it was at 250. So shorted it once, had to get out because I got a little nervous at 245, but hammered it again, just got down under 240. I'm hoping this thing gives it Jerry Orbach. You haven't heard the Jerry Orbach.
Jerry Orbach. We haven't had a Jerry Orbach in quite some time.
Yes, the Jerry Orbach trade is when the gap gives it all back. Jerry Orbach, the best, one of the most unloved, unappreciated actors of our time. Jerry Orbach, yes. But more about the Carvana. This is not for everybody, kids. This stock can be dangerous. If you're not willing to risk 5 points to make 10 or 15, don't trade it. The options should be very, very expensive, even though it's Thursday. But let's go to the cheapies. My cousin mentioned Peloton. He still has one. He still uses it. I was like, are you serious?
Oh, this is Jeff Mackey. Jeff Mackey, he was telling me how he, he's like, I don't know, late 40s. And he's like racing against these kids. And he's kicking their asses. And it motivates him. And he uses it every day, he's telling me.
So does my cousin. I couldn't believe he even has one.
I couldn't believe it either.
Yeah. But you know what? This thing... Absolutely, Jerry. Bobby, well, I don't even know what I'm talking about anymore. But Andy Dufresne a couple of weeks ago, you came out of the muck and now you're running, but now you just ran into, resistance from back in last summer. So again, I don't want to get in the way of a short squeeze because I love this trade, but you already got this monstrous move. There's the VWAP. Again, we've been up since 7 o'clock in the morning. I wasn't really excited about buying it until it broke pre-market highs. And I couldn't believe I was even suggesting to buy this thing at 770, and it went to 850. So now back to 770. We'll see what we do here on this one because it could easily squeeze to about $10. But again, when I see a stock that's already gone from 250 to 850, I'm a little cautious here. But definitely watching it. And our old favorite Roblox, killing the shorts right now, absolutely annihilating the shorts. Finally got something out of this stock. You've been holding it for the last 3 years. It just Andy Dufresne as well, over 46.82. And this one, again, I'm not a super bull of this stock, but you see the peak where it went to, that's just where it went to right here. So Andy Dufresne back to prior resistance. That's what the Andy Dufresne trade is all about. But if this could consolidate, and you guys are fans of this stock, which I'm not, I don't play video games. I don't know much about this thing. But if it stays above this 52 area, you could be looking at a $76 stock here, especially in a market that never goes down. I heard you guys talk.
You know what Strazza asked me yesterday? You know what he says to me? He says, JC, I don't even know who Andy Dufresne is. Can you believe that?
All right, stop right now. Go watch Shawshank Redemption right now, and then watch it again, and then watch it again. All right?
I mean, there's so many good one-liners and just so classic. I'm trying to explain to the kids these days. They don't know, Kenny.
Yeah, they don't know. Somebody hasn't seen Shawshank Redemption. You probably haven't even seen Jaws, right? Now, if you haven't seen Jaws, we can't even be friends. But more importantly, it's been a great week. Tonight, we're going to gather tonight at 8 p.m. after we play some Grateful Dead on my website from 6 to 8. We'll play a show from Halloween at Nassau Coliseum in the 70s. Pretty good show. And then I'm going to crunch some charts with everybody to show you how I prepare. So if you can't get into our chat room at 7 o'clock in the morning, this is what I do. I prepare the attack. So then when one stock's moving and you want to know about the other one, you'll already have your entry. So the red lines are what I draw. It's basically VWAP, multiple time frame VWAP, and just pivot points from prior prices. And then when you get it, you'll get it. And it's nice. We're going to do it tonight in a nice, relaxed atmosphere where the market's closed. We're going to be talking about Apple and Amazon and where this market's going for the rest of the year.
I love it. I love the simplicity, Kenny. We give it some silly names because you like to give nicknames to the faux show bro and the Andy Dufresne pattern and the Jerry Allback, right? Love all of that.
Yes.
But at the end of the day, these are nicknames for something that's really, really, really simple. So I love that we can have fun with something simple, so it's not like, boring.
Yeah.
The VWAP, the money line, still not sold on that.
Call it whatever you want, baby. It's
Call it
awesome.
whatever you want.
Right.
And you
That's
know what's
right.
not
As long as they're
awesome? The
calling me.
Yankees. How about
Right.
that for a freaking stock that you thought was a dead cat bounce and then rolled over and died? That was sick. That was sick and demented how that all worked out. But live betting, I got plus 750 on the Dodgers for the break your heart trade. And I can't believe my heart was broken, but some of the money pays for the dinner we went out to yesterday. So
It does. I love
live
it.
betting
Good for
tonight.
you.
And also, not only will I show you charts, but we get to experience the Jets game together. And I'll show you how to
Oh wait,
live bet on
are they
draft.
playing tonight?
That's tonight.
Oh jeez.
So we got Amazon,
Lord help
Apple,
me.
charting, drinks,
All right.
maybe something else, and of course the Jets, which might be the biggest sucker bet in the history of the NFL. They're trying to pretend that the Jets should be favored tonight by 1 point. 1 point. The bookies.
What are they thinking, Kenny? We'll teach them. We'll show them.
I don't know, but I'm
All right.
thinking Jets are up 14 in the first quarter with surprise 2 touchdowns, and then they still lose. That's what it is. And if you guys are in the neighborhood, I've got Twix bars and Reese's peanut butter cups, of course.
There we go.
Nobody ever shows up, and I'll be eating all of these within the next 3 days.
Nice.
All right, from your lips, Kenny. We'll see you.
All right,
Kenny,
Carvana
adios,
short,
man.
kill it!
Never a dull moment with that one. Never a dull moment. I like what you did here with the font.
Yeah, 1 day only. It's going back to normal tomorrow.
Oh, that's a bummer. We could have done it all week,
Nah, I could have.
Too much?
I didn't think about it until this morning. But,
All right. Fair enough. Fair
All right,
enough.
let's bring on Mr. Clissold from Ned Davis Research, shall we?
Please. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Ed Clissold.
How we doing, fellas?
Doing great.
Uh,
Happy bull market. Happy Halloween.
Ed, how you doing, man?
Well, good, except for I came on and I saw on the chat somebody's dunking on Shawshank.
What are they
I
thinking,
mean,
Ed?
what are we doing, people? I mean,
Come on.
I'm of a generation where that's just blasphemy.
I'm with you. In fact, our resident day trader calls this particular pattern the Andy Dufresne pattern, when it's just down in the mud and just, right? Just kind of like Roblox recently, Peloton before that, right? Just, down in the mud and then comes out and splashing in the rain and it explodes higher. The old Andy Dufresne pattern. So it's a little inside joke here. I think you understand the reference.
I love it. I love it. It sure beats the, what would we call it, like a U-shaped pattern is what we would
I think
call that
Edwards and
before.
McGee called it a saucer bottom.
Oh, there you go.
That's
yeah.
a stupid name. Andy Dufresne's
that's
way
not
better.
exciting. Yeah.
Yeah.
Any sort of early 90s reference to movies, I'm all for. So.
Dude, was Shawshank Redemption early 90s? Am I that old?
1994.
Wow.
Same year as Forrest Gump and Pulp Fiction. Fun fact.
Wow.
Yeah.
Okay.
Yeah, that was one of the worst decisions ever was to give Best Picture to Forrest Gump. I mean, I like Forrest Gump fine as it is, but I mean, come on, it's got to be Shawshank.
All right.
I mean,
Wait,
Forrest
real
Gump
fast.
was pretty good, Ed. I mean,
No,
Forrest
I liked
Gump.
it. Yeah, no, again, Tom Hanks was an all-time heater in the early 90s.
Yeah, he was definitely on a heater.
Philadelphia and,
So, Ed, I think it was a mama always said that the stock market is like a box of chocolates. You never know what you're going to get. Right?
there you go.
Is that what's going on here? Listen, it's a bull market. We know all those people talking about how it was just a bear market rally, the people that were crying about, small caps were underperforming. We've been in a bull market for over 2 years. The question is, how much longer do we got? So when I think about it, I'm thinking about the average duration of the bull market. We're not quite there yet. The average performance of a bull market, we're below average there. So if the bull market were to end now, the way I see it, that would be, I don't know, lower probability, right? So, but who knows what's going to happen? So I'm looking at market breadth, and for a heads up that things are changing, maybe some rotation into the defensives. That's where my head is at when I am personally questioning the strength of this bull market. I wanted to throw that out there to you. I want to hear your thoughts.
Yeah, a couple things. Number one, the first few months of the bull market, you start it to like September or October 2022. What's actually kind of weak for a bull market. So you can say first 2 years, yeah, we're about average, maybe slightly above average gains for a bull market. So it's not like this thing really ran. The second thing is that over the last 60 years, bull markets in the U.S., this is just a U.S. phenomenon. You go to other markets, doesn't really apply. But there have been two bear markets for every recession. So you kind of go recession bear. That's where you get like 35% decline. Usually it's pretty brutal. You come out of that, you rip higher for a couple of years, called a post-recession bull. Everything working against you in the recession is now working for you. You got margins are expanding. There's a lot of pent-up demand. But this is where the U.S. economy comes into play. It's very large and very developed. You don't maintain these growth rates for very long. I like to say an emerging economy that can do that. So things roll over year 2, maybe year 3, and everybody freaks out about a double dip recession. There's only been one double dip in the last 60 years in the U.S. It was 80, 82. Every other time,
which is hilarious because every time it's always a double dip.
Yeah,
and it actually almost never is.
It never. Yeah, exactly. Yeah, like that. That's something. That's something you can fade, right? The double dip call it 18 to 20 to 36 months into the expansion, and but you still get a shallow bear normally because there's some reasons for it. Things don't look great. So about 7 months, 20-25% on average, and then when the recession doesn't unfold, you go into a new bull market, and that's basically the last 4 years. Right, we had a brutal bear market. It was only 6 weeks long in 2020, but it was almost exactly the average decline you get in a recession bear. And we ripped out of the shutdowns, came down in 2022 over fears of a double dip, didn't happen. And now here we go. So then you ask yourself, are we ready for another recession? And I think it's pretty clear right now, the risk of the next few months is pretty low. Okay, no next recession. Now, there's been a couple of exceptions to this pattern. 4 times in the last 80 years, we got 2 non-recession bears in between the recession bears. So like 84, 87, those are two non-recession bears. 2011, 2015, another example. But those have lasted. You've had at least 3 years in between those non-recession bears. We're only 2 years into this. So you never want to say never, but it'd be unprecedented to get another non-recession bear as close to the one we just had. So probably not a non-recession bear, probably not a recession bear. So it just doesn't fit right here. So that's
what about the sum of the parts, right? So we're talking more index and everything. Okay. What about the sum of the parts? When you go back and you look at major tops, you tend to see that deterioration taking place before. You don't get breadth expansion into the end, right? You tend to see that deterioration. Can you speak to that? And are you seeing any of that? And what would you be looking for?
Yeah. That was the second point, really important one is that look, we got almost 70% of stocks above their 200-day moving averages. That's not what happens in your bull market peak. Usually that number comes down and it's pretty low. For example, in March of 2000, we had about 40% of stocks above their 200-day moving averages. I mean, that's a divergence. The advanced decline line, that recently made a new high. Percentage of stocks at new 52-week highs, that made a new high for the cycle a few weeks ago. That usually peaks like months before a bull market. So this is just not the technical action you see. In fact, I think there's a little bit of a misnomer of how narrow the market has been because of the Mag 7. Actually, a lot of stocks have been doing fine, just haven't been going up as much as the Mag 7. That's okay.
What about like consumer discretionary on a relative basis, right? If you want to throw up, this is the one that's got me, and I want to hear your thoughts. Throw up, I know Ed brought a few charts, but before I hop, I did want to show that slide 10. So when I'm thinking, okay, this is a bull market, consumer discretionary, obviously one of the more important offensive sectors in the market. Spencer, can you throw up slide 10?
Oh, sorry.
One of the most offensive sectors in the market, looking to potentially complete a 10-year top on a relative basis. If consumer discretionary completes a 10-year top on a relative basis, bull market over as far as I'm concerned. So if you reverse engineer what the market looks like, if this bull market's got legs, they got to come in and buy these. Am I Am I overthinking this particular group, or you think that that's a need, not a want?
Yeah. First of all, I think it's a really good point that consumer discretionary is an important sector for the whole economy. So you need it to work. And then the leaders in a bull market usually continue. And is discretionary a leader? I mean, of the bull market since 2020, this tells you kind of no. So I'd say probably technology and communication services are probably more important this
time. So you're anchoring to 2020, Ed?
Yeah. So there's 2020 and then 2022. I think those are the ones, because that was the last recession. But this, I would not want to be too excited about stocks if the U.S. economy being so driven by the consumer, if consumer discretionary wasn't doing great. So I'd rank it probably not the most important sector, but I'd certainly want this one to be participating. So I think it's a pretty important support here. I wouldn't want to get too far below that support line.
We start breaking below that. I mean, I'm going to have a hard time being super bullish this market if discretionary is really rolling over relative, especially if you start to see a little bit of a bid in the staples. Granted, on an equally weighted basis, staples made new all-time lows relative to S&Ps yesterday. So that's...
Yeah. So one thing that we look at is we call it SHUT. So it's staples, healthcare, utilities, and telecom.
Yep.
So that's like a defensive group. And
I want to bring that up. Where's that chart? That's this one.
There we go. Yeah. So that's cyclicals versus SHUT. So cyclicals is everything else. And so when those lines are going up, it's cyclicals outperforming SHUT. When it's going down, it's SHUT, or defensive, it's outperforming. And then the blue line here is the average performance around elections. So usually people get nervous going into the election, and defensives outperform some. And then after the election, or actually starting out just a few weeks before, you rotate into cyclicals. The orange line is this year, this cycle. And so even though I find it really interesting that even though we've had one of the best years to date for the S&P, I think it's the best election year so far since 1936. So I mean, just remarkable. And yet it hasn't always been risk on. It's been somewhat defensive. And some of this is driven by utilities, which maybe not completely defensive, right? So this is the AI move.
Yeah, I mean, Ed, you and I are old, got to teach these kids. You and I are old enough to remember when utilities were a leader in that bull market, that 03-07 bull market. Utilities were a leader. Utilities are a leader this year.
Yeah. And I think AI is part of it. I think the bigger thing too is just the plunge in interest rates. I don't think too many people were looking for that unless they thought there was going to be a recession. So you had this great combination of still stocks going up and rates going down. But it looks like we started this cyclical rebound, a few weeks earlier than you normally get. And so of course there's stuff going out the Fed and looking like the Fed. There's fear before the Fed screwed it up and they waited too long to cut rates. Doesn't look like that's the case. And so, but this is not abnormal to get a little bit of defensiveness, and now it should rotate more cyclically.
It already has.
Help discretionary.
But this is saying it already has.
Yeah, it started early this time, but I think it's you look at this chart, you think, well, this is something that has legs for several more months. Yeah.
So Ed, I got two questions, and I got to hop shortly, but so I'll let Spencer take it. But before I hop, I wanted to ask you about, from a seasonal standpoint, Ned Davis Research has always done an excellent job, and I was just referencing the old Stock Traders Almanac. Shout out to our friend Jeff Hirsch. I literally just got it in the mail this week, so I'm like a kid in a candy store. I freaking love this shit. Ned Davis has always done amazing work from a seasonal perspective. A lot of the stuff that you guys do has inspired us to build certain things and do certain things. So big shout out to the work that you guys are doing. So I'd be remiss if I didn't bring up the fact that during the worst 6-month period of the year, all of the major indexes are all up double digits. Dow, S&P, NASDAQ 100, EEM. I mean, even emerging markets are participating in this party during the worst 6 months of the year, that sell in May and go away period through Halloween. So if stocks couldn't fall when they're supposed to fall, and did great when they were supposed to fall, how are stocks going to do when they're actually supposed to go up we start the best 3-month period of the year tomorrow.
Yeah, history says it's a real good indication for this part of the year. So I know that maybe the inclination is, we pulled the gains forward, but history shows you that's not the vast majority of the time. That's not the case. That if you do well during the seasonally weak part of the year, then you're going to do even better during the seasonally strong part of the year. So, or as they say, momentum leads price. We got strong momentum, so the price should keep going up.
Is it too easy? Just buy in October and get yourself sober, best 3 months, fade it into the end of January for that February decline, and then you buy that dip into March and the ripper into spring. Is that too easy?
Well, what I say is you work until it doesn't. I mean, there's certain years it doesn't work, right? You got to pay attention to other stuff going on. I mean, look, if the economy collapses, who cares? But yeah, I mean, this stuff works. And the fact that there still are so many naysayers out there who say it shouldn't work. Okay, fine.
They said that last October. Don't buy the dip in last October. What happened? The October before that in 22, they said you can't buy the dip, recession, credit crisis, everything's about to fall apart. Nope. The October before that, if you bought it, you made money. The October before that, like every single October, they tell us not to buy. We do buy, and that has worked out very well. So, like, to your point, like the naysayers, like, it's too easy. It can't be that simple, sort of, people.
Yeah. Yeah. And I kind of leave you with the point here that people have been so worried about a recession, where it's going to start in 6 months, 9 months. Over the last 40 years, the S&P has peaked within 3 months of the start of a recession. I know at the moment it's hard to tell when the recession is going to be, but if you say, I'm going to get out now because there might be a recession in 9 months, like there's really no historical reason to do that.
Yeah.
You should, you can wait. You have the luxury of waiting until you get some more information. Think of recession starting immediately, different conversation. But if you think, something might happen in 9 months, dude, it just you can ride it out for a little while longer.
I want to finish up with the percentage of stocks above the 200-day moving average. I'm going to turn my camera off and I'll let you run with it. But I want to hear your thoughts. If you're long equities and you're looking for some kind of breadth deterioration, tell me what you're seeing here. Yeah,
this is telling me that most stocks are trending up, man. And that's the kind of move you want to see in a bull market. The notion that this market is driven by only 7 stocks is just not accurate. Most stocks are in fact going up. They just haven't been going up as much. When I look at breadth data, I want to look at absolute. That's a message for the overall market. Relative breadth is great for trying to figure out where to focus, but in terms of overall market, look at absolute breadth. And so you can get hiccups here and there, and that's fine. But the fact that the vast majority of stocks have maintained their uptrends throughout all of this tells me it's still a bull market.
The orange line there is a percent of multi-cap stocks above the 200-day. Can you explain that?
Okay, yeah. So we have our own database of common only stocks. I mean, the NYSE data now that's all fine, but we wanted to create our own common stock stuff because there's a lot of on the exchanges. There's a lot of SPACs. There's a lot of ETFs and different funds, and so this is just common stocks that have enough liquidity to be.
I like
traded.
it. You're using your own judgment because we were talking this morning how the system is not perfect, right? The indexes are not perfect. There's no perfect index out there, right? They're all actively managed in some way, shape, or form, and they have their own rules, and they're all subjective, right? The sectors, the indexes, industry groups, everything is subjective, right? So it helps to not live your life by those because they're not perfect.
Yeah. I mean, like the communication services sector, I understand why they did it from a business perspective, but from a stock analysis perspective, it's terrible. You got these old line telecom companies, slow growth, high dividend stocks with these social media companies. I mean, it's just like completely different situation. And especially now, if you look at the index providers, they're in the money making business too. And so they're trying to create indices that are tradable. They're not necessarily trying to create something to help you analyze the market. That's not what they're doing here. So that's why we did this a little over 10 years ago because Ned just threw up his hands and like this stuff isn't working. Let's create our own. And so that's what we did.
Yeah, and I mean we were talking about this in a meeting or on a phone call yesterday, and it's a great point you bring up. Is it worth it to look at a stock from the point of view of the business category that it's in, or how Wall Street treats it? Like I always think back to like PayPal and Square, right? PayPal is a financial, right? Square is a technology, right? They're almost in the same business in a lot of ways, and they trade very differently, right? The way Wall Street treats it, they're not the same at all. But the business is kind of the same in a lot of ways. So how do you square that circle? It's like, should you treat a stock how Wall Street treats it, or treat it how, based on the business that it's in? It's confusing. I don't know if there's a right answer.
Yeah, no. Well, I'd look at it based on how Wall Street treats it. That's an important thing. That's why we slice stuff up a lot of different ways.
Yeah.
And the nice thing now is a lot of these trading platforms, you can do a lot of this factor analysis that even like 10 years ago was just left to the pros.
Yeah.
So you can do that stuff. Now, I mean, look, these created ETFs that are out there, that a lot of them do, they're fine. They do good things, but you don't know. You have to kind of do your homework to know what's in them. And so that's, you just have to be aware of what you're buying. Like particularly, like we do a lot of work with dividends, and the marketing people in these dividend funds, they're very creative. The name doesn't usually describe what's actually going on underneath. So you think you're buying some nice conservative dividend fund, and you're not, or you think you're buying some dividend growth fund, and like, no, these things aren't.
You won't find a bigger fan of ETFs than me, but you can't look at the name. You really can't. The name is not even worth like the digital ink it's printed on, right? You really gotta look at like the exposure, the allocation, the weightings, right? Because like these names, a name could be anything. The magical income fund, right? It doesnn't matter. You can name whatever you want.
Yeah. So I mean, look, kind of let's go back to another 80s reference, Princess Bride, movies reference, Princess Bride. Life is pain, and anybody's telling you anything different is trying to sell you something. So that we're in a world of people trying to make money, and that's totally fine. But you have to know what you're buying.
All right, what should be my interpretation of this chart here? This is the sentiment composite that you guys put together here. I'll make it bigger so people can see. S&P up on top, sentiment composite on the orange line. We appear to be approaching excessive optimism. But what should be my conclusion here?
Yeah. So, by the way, this has about 30 different data points in it. Things you guys all probably look at: the VIX, put call ratios, all these polls of investors. And so, a high number means there's optimism. Low number means there's pessimism. And the market does, not surprisingly, it does worse when there's lots of optimism. Everybody who's going to buy has, and it does better when there's pessimism because the weak sellers are out. So, it got pessimistic in August when we had all that stuff with the yen carry trade and all that stuff. And we saw hedge funds in particular, they got small and stayed small. So even though the market, and we got like 8 record highs, and this was still stuck in neutral, and finally it got to be optimistic. It's actually really rare mid-October in an election year to get optimism. And so that's what I thought, okay, well, maybe the market pauses a little bit. And it did a smidge, and we got this into the neutral zone. So, things are kind of mixed at the moment, but I think the fact that we've gotten here, like this happened in 1996 and happened in 2020. So only 2 examples, but in those cases, you had really great post-election rallies. So it kind of takes some of the froth out of the market, in what was a pretty good year. And that sets you up for a nice year-end rally. So that's how I interpret this right now. I mean, ideally, I'd love to get it lower. That is more pessimism. That would be awesome. Sometimes you don't get you don't get what you want. But provided this doesn't take off and show a ton of optimism between now and election day, I think it sets us up for a good year-end rally.
Well, forget between now. I mean, election day is like a week away. So what about after election day? Right, that interests me more. Right. Like, isn't that why?
I mean, look, again, if this thing kind of gets way up there, like 75, 80%, that's pretty optimistic, and probably everybody's going to get in. A lot of people already have. But if it can kind of stay stay from getting too frothy, then I think you have those really good seasonals, particularly in an election year. That probably will be more important. So you know, there's a little bit of art to the sentiment stuff, and I think at this point you just want to make sure you're not, not everybody's on one side of the trade, and that's what the high optimism would show you.
Do you look at the election from a market standpoint as this binary event, or do you think that a lot of the results may have been priced in already, one way or the other?
Yeah, well, I think there's been some talk the last few weeks. Trump did a little better in the polls, like the betting market show him pretty good odds of winning. I don't know how accurate all that stuff is, but there's been some things that maybe think the market's was trying to price in a little bit of a Trump victory, with rates doing what they're doing, Bitcoin and so forth. But look, I think if you get into most of the stuff the candidates are saying on the campaign show right now need Congress to do something to get them through.
Great point.
So most of it's not gonna happen. If it does, it's not gonna happen for a long time. Like, it's gonna take a good year. I mean, even like the Trump tax cuts, which again was a surprise. Those were a surprise. That took that took a year. And and even some of Biden's the first aid package, Biden administration, it was still early days of pandemic, but after that, it took to get some of the infrastructure stuff through, and CHIPS Act and Inflation Reduction Act.
Right.
That all took a while. I view this a lot from sentiment. There's a lot of angst over the election, understandable. But once we get through it, the market would.
There might be, but as this chart shows, there's also a lot of optimism out there from the markets. So that can't be that bad a thing. What I want to know is, like, looking at maybe the next 6 months or 3 to 6 months, and what do you think we're not focusing on right now, or people are overlooking from a market standpoint or a sector standpoint, or factor, I guess?
Yeah. So I'm a little concerned about earnings growth heading into next year. Again, I don't want to get too ahead of myself and get fearful over something that might happen. But the earnings expectations for Q4 in 2025 are pretty elevated. In particular, we're seeing you're seeing it now. I don't get individual stocks too much, but the Mag 7, they're suffering from the law of large numbers. I mean, it's still great companies. They're producing great earnings, but are they going to be able to grow the rate that they've grown over the past 6-8 quarters? Probably not. And so the market tends to not like it when the second derivative turns negative. That is when things start to roll over and slow down. And even if it's from a pretty high level. And so that's something I'm concerned about as we get into next year. And so we'll kind of see what these earnings reports look like, and see what the guidance is. And so do you
have an impression so far of how it's been? I mean, it seems like it's been mostly good. This earning, a couple hiccups here and there, but it seems like the numbers have been mostly good.
Yeah, and this is the dilemma. Like, they're good numbers. I mean, a lot of these companies they're still going to grow faster than the market. Like, I think S&P earnings estimates for next year around 15%. In most of the Mag 7 is going to be well above it. But if you're coming from triple digits to mid double digits, that's still a slowdown. And I think that's the real question with the market. How much do people really care? I think the multiples from Mag 7 have come down some. They probably, we have a chart showing that their relative multiples are still a little bit elevated, and so I wouldn't mind if they came down some more. But the secular story we're talking about earlier about, like the secular story with consumer discretionary. I mean, and tech and communication services, certainly they are the sectors that are driving the secular story. So I don't expect that them to completely break down, but can they consolidate for a while? Yeah, I think that's possible.
Ed, more importantly than all this is how you doing, man? You were supposed to join us like a month ago, but a little hurricane, not so little hurricane, got in the way. How did you fare down there in Tampa?
Yeah, thanks for asking. We did all right. So I'm a little bit south of Tampa in Sarasota, and we actually the eye went over my house.
Oh gosh.
Yeah. So we got a lot of family. We're one of those people, like, everybody's migrated to to Florida. So we went over to Miami to get out of harm's way. But our neighbors were texting us pictures of walking around the eye of the storm with like no wind and stuff. So we took a big hit. The Barrier Islands. Look, if you want, if you say I want a chance to buy some property on a Barrier Island, now's your chance. But it's pretty tough for some people who lived right on the ocean, but we're fine. You know, we're about a mile inland, and you know, you have a house that was built in the last 20 years, you're okay.
That's great for you, but I also I can't imagine, right? Like, granted, I don't live in I mean, I guess we get hurricanes every so often in the Northeast, but not like you guys. So I can't imagine going through that year after year. But good. I'm glad that you were spared. Mostly. So it seemed like it was touch and go there for a minute. All right. I'll let you go. Anything we want to talk about? Any final thoughts that you wanted to address, or things on your mind?
Yeah, I mean, I think that the main thing is, don't get too shaken out by all the negative news flow out there. I mean, I'm sure in the next week there's going to be all sorts of crazy stuff coming across. But let the market speak to you, and the market's telling you, things are in pretty good shape.
All right, best Halloween candy.
Oh, Reese's, hands down. Chocolate peanut butter. I'll take that. If you get ice cream, I'm like, I don't even look.
Ice cream on Halloween? What?
No. I mean, like in general, chocolate peanut butter, and that combination, incredible. So Reese's, great. Reese's Pieces, a notch below. But Reese's good, and by all these like different Reese's peanut butter cups, like the different shapes, don't like them as much. Like the consistency of the chocolate and the peanut butter, not as good. You need your classic.
So there is something magical about it. I can't have Reese's. I can't have peanuts. So never had a Reese's in my life. But I'll take your word for it.
Oh, never mind. They're terrible. Never mind. Yeah. So what's your favorite? You don't get peanut M&Ms. You don't get Baby Ruth.
No. I've always been a Kit Kat guy. Kit Kats has been my thing.
That's solid, though. Love me a break of a Kit Kat.
Yeah. This is actually my first Halloween because I recently learned that I'm not allergic to all nuts anymore. I used to be. So this is my first Halloween where like almonds are on the table. I don't know what other candies have non-peanut nuts, but I can have non-peanut nuts now. So whatever's on the table, Almond Joy. I don't really know what else there is. But
are you coconut? Coconut doesn't count, does it?
Coconut, that doesn't count.
Okay, yeah. So Almond Joy, yeah.
I don't know what else. If there's anything I should be trying this year? Anything in the walnut, almond, pistachio, cashew family? I don't know. I don't know.
Yeah, a lot of that stuff. Like I don't know what's in a Snickers. I mean, probably there's peanuts in there.
Yeah, right? that's no bueno for me. Sadly.
Yeah, all sorts of stuff.
It's all peanuts. I'm still missing the best one. Oh well.
Yeah. Well, the other thing is that we during the pandemic, my oldest is an aspiring engineer, so we built a candy catapult to launch candy at people as part of a joke, saying, "Well, we can't touch you. We want to be careful of pandemic. That's all fine." So we launch now. What I do is I'm the guy in the neighborhood who's launching candy 20 feet at kids. So it's really about the type of wrapper and the density of the candy. So in that case, Snickers are great. They fly much better than say one of those little peanut M&M packages. They're much more aerodynamic and dense.
The Reese's have too much surface area. They're not aerodynamic, right?
Exactly.
Yeah.
Exactly. I need a missile.
Yeah, so that's right.
That's what I go for.
All right. Thanks a lot, Ed.
All right. Talk soon.
All right. JC had to hop early. I didn't even know that. Steve is doing things, so it's just me and I think. Oh, there's Steve. I think we have Sean here. Today's Thursday.
I've been here. It was supposed to be my day off, and maybe the communication of the planning around it wasn't perfect, but I've been here for you.
I appreciate that.
I missed the conversation about the candy. I kind of was hoping somebody would ask me what my favorite candy is.
What's your favorite Halloween candy? Most favorite and then most overrated?
Reese's is the best.
Why do I even ask?
An honorable mention for Butterfinger. Sometimes I'm just feeling weird, and that Butterfinger just really hits right. You ever in the mood for a Butterfinger?
No, but I was watching the Yankee game last night, and I was all pissed off, and I was like, you know what? Screw these kids. I opened the bag. Screw these kids. I'm opening the bag now. I'm mad. I need a Kit Kat.
You know,
I'm mad.
we really don't get any trick-or-treaters where I live, and it makes me sad.
Yeah.
There's no children in the West. There's no children here. So.
All right, real fast. I just dropped the link in the chat once again. VC Tokyo. That's for the Amazon earnings stream tonight. It's going to be on YouTube as well. But if you go to that page, enter your email, you will get the link to our stream. But also, you'll get our Amazon earnings preview, and we're going to send out a report tomorrow for everyone that enters their email on that page. So it's a little bit more than just the stream today. But today's going to be good. Strazza, JC, Jeff. I'll be there just in and out a little bit, but talking. It's not very often you get someone as knowledgeable on an industry group as Jeff is on a retail. So we might as well just bring him on to talk about it. And as we were discussing yesterday, I think offline, there's a lot more to like retail than just like what the street considers the like retail stocks, right? Like we're really talking about like consumer stocks as a whole. I know, Steve, you had a recent Peloton trade. Like Peloton is like in this realm, right? It's a consumer cyclical, right? But it's in that same vein. So it's all game, right?
Consumer goods, retail. Right. It's a very large arena.
Right. It's all game.
So the Peloton trade we put on, when we put it on, Spencer, it was about 40% out of the money, and got a couple emails about how crazy it was. It's a 10-bagger here this morning. It worked exactly how we hoped it would. We sold
and that was the earnings.
Yeah.
Thank you, earnings.
So that's exactly that was the game plan. If you go back to the original post when we, wrote about the trade idea, we said, this is something that we're looking to secure a free ride, right? So sell half of our position at a double before earnings and basically earn ourselves an earnings lottery ticket. The marketing people don't like when I call it a lottery ticket, but it's pretty good because a lottery ticket means you can make a ton of money if you hit. So
was that a pun intended?
We own these calls. We didn't pay anything for them ultimately, right? We took our money back, and then we get to hold them for some incredible potential upside through the earnings report. And the reason why we chose Peloton is because it was up 40% after its last earnings report. And we thought, oh boy, if we even get half of that out here this time around, this trade could be a huge winner. And we just sold our remaining position for 10x. We bought these calls for 16 cents. We just sold them for $1.70.
Was that a pun intended? You got a free ride on the Peloton?
Ooh. No, but that's that's what we're out here trying to do. With breakout multiplier. So it's nice when these things happen, so we could point to them and say, oh, look, this is a great illustration of what we're trying to do here.
If you don't know what we're talking about, breakoutmultiplier.com. You can get these trades before Steve sells for a 10-bagger, right?
It's one of those systems. Like we had a great conversation with Jason Levitt yesterday. It's one of those, and he was talking about how, my system, there are environments where it works great in, there are environments where it works okay in, and there are environments where it doesn't really work in. Right now, for breakout multiplier in this market where everything seems to be ripping higher, look at these speculative tech stocks, right? Breadth continues to expand, more and more participation across the board. We're seeing massive momentum moves. The most heavily shorted stocks are ripping. This is the kind of environment where this kind of a system, which is very aggressive, high risk, high reward system, really thrives in. So, to be expected. We'll have more of these.
Let's bring out Sean.
Yeah.
Sean is dressed as a Bills super fan, I think.
Well, this is the reason why JC's not on the show anymore for today, because we have a big game this weekend, and he does not want to face the music.
I wouldn't blame him, but yes.
Dolphins stink this year.
My son, speaking of Halloween, my son is actually dressed as Josh Allen this year. He looks great.
I like Josh Allen. Seems like a great guy.
So you're one of those dads that, like, I guess I can't blame you, but like you made your kid a fan of your teams.
I didn't make him. I've been trying to steer him towards the Broncos for an easier life, but he's all in on the Bills. He sees me watching the Bills and he wants in. So
all right, I can't blame you. I'd probably do the same thing.
I don't think my kids will get a choice when it comes to sports teams. They don't. They're too young. I think you choose for him, really.
I did not choose. Like I said, I've been pushing him towards the Broncos. He has no interest. No interest.
All right. Sean, what's on your mind here?
What's on my mind is the gap down openings like today are precisely the reason why I am, looking for positions that are going to zig when the market zags heading into the election next week, getting some bearish exposure on, getting some narrative change exposure on. What yesterday me and the guys talked about solar as one of those things that one of those sectors that could go up if the unexpected happens next week. So I'm looking for the unexpected. Did people expect the market to gap down this morning? No. So I'm, I got a lot of bullish positions on, and I need a little cushion.
This is fine. I don't hate what you're saying, but I do want to clarify. 2 stocks are dragging the major averages lower today. Beneath the surface, things continue to look fantastic.
Yeah, I'm with you. But
we got stocks like Roblox and Peloton up 20%, day in and day out. The animal spirits are alive and well out here.
Yeah, but nobody cares about Peloton, but more people care about Microsoft, and that's what's driving the markets right now.
I know some people who really care about Peloton right now. I know some people who are staring at their account, watching the Peloton ticks right now.
Yeah. Well, as we're speaking, the market's making new intraday lows. I know it's early, but pretty ugly open for the bulls. I mean, we probably buy the dip here. Let's hope. But yeah.
So, Sean, so I take it you're not putting on any election trades. No election YOLOs. You're not buying naked calls and DJT.
I don't think that's accurate. I think many of the trades I have on are election plays. Maybe not intentionally. Right. But certainly the much talked about M&T trade that I'm in is definitely an election trade, right?
Yep.
But no, I'm not actively seeking trades that I'm going to get into and out of right after the election. That's not my game. I don't have any expertise in that area. I'm going to stay in my lane.
I was saying that on our video yesterday. I said, we do own a lot of banks. We do own a lot of cryptos. We talk about solar stocks. So it might feel like we have election trades on, but that was never our intention. I like our exposure, in other words, going into the election, but it's not like we positioned it this way for any certain sort of outcome or anything. We're just buying the patterns that we would be buying anyway.
Yeah, I mean, look, at the end of the day, there are certain market events that happen from time to time. Some we anticipate, some we don't, but certain events where no matter how you're positioned, everything's going to be affected by what's coming, right? Everything. Some things might go up, some things may go down. Few things are going to be, as if nothing happened, right? So you can't really avoid it. All you can do is manage your risks and put yourself in the best position to ride it out, which is kind of the mode I'm in right now.
Ride it.
So let's talk about some change of narrative trades. I know that's not a popular topic. I feel like with everybody, but what if? Let's just play the what if game. All right. What if one of two things happens? What if the outcome of the election is opposite what the market seems to be pricing in? Right. I mean, we've seen the pollsters be wrong before, right? I mean, all we have to do is look back to 2016, going into 9 p.m. on election night. Everyone thought Hillary Clinton had it in the bag, right? Turns out that's not what happened. So the pollsters can be wrong, but let's say that doesn't happen. Let's say the other thing happens is that Trump wins, but maybe we get a big sell the news event, right? I mean, either of those things can happen.
That's what
I think we need to be prepared for it, prepared for a change of narrative. So Strazza, in your mind, other than solar, we talked about solar, what are some other sectors that might take a U-turn if the narrative changes?
Are you saying like if Harris wins?
I'm saying if Harris wins or if there's a big sell the news event. That's what I'm saying.
So I love this. I think it's a fine exercise. I'm not even planning that this has like more than a 1% chance of happening. So like I am not positioning for this even in some sort of like wild situation. I don't see it. We've done a lot of work looking into like the swing states, what's going on, the groups that are working. I'm not I'm not thinking that at all. In fact,
So what if there's just a sell the news? What if there's just a sell the news? Trump wins and they sell the news.
I think that's the most likely outcome.
Okay, so let's talk about that. What sectors are most vulnerable in that situation?
Regional banks.
Banks, cryptos are a huge question mark. It would be great if you got a little sell the news move in some of these areas, because those are dips that I think you would want to buy all day long. I really don't know. I think you might see the opposite from something like solar. Like, oh my God, thank God this is past us now. And you get some sort of like bid in those stocks because they've been so beaten down. But if you look at regional banks right now, like some of these bank charts, they're not going crazy. They're not overbought. In fact, like these are just nice, like KRE, dead sideways since late July. Just really nice, tight. That would be ascending triangle.
Here's the one thing I don't see happening.
Yeah.
Here's the one thing I don't see happening. Let's say the market is right and Trump wins. I don't see any sectors ripping on that news. Like the ones that have already done well leading into this, I don't see them going, skyrocketing higher from here. Maybe they tick up a little bit, but
no, I could see KRE up 5% the next day.
Sean, can we agree that whatever the market does, in hindsight, will seem extremely obvious? Like, oh, of course that was going to happen, right?
I could see a big sell the news, but I could also see the opposite, where it's just like party town.
Oh, don't get me started on the hindsight traders, Spencer. I had somebody email me this morning talking about how I had a long position on in Carvana earlier this summer, and then we got stopped out at a reasonable level.
Yeah, we did. Holy cow!
And Carvana's ripping higher, and he's like, maybe we need to rethink our exit strategies. Like, yeah, okay, hindsight champion. Like, yeah, of course, it looks like it now, but at the time we had no idea that thing was going to double. I mean, we have to stick to our risk management plans, and the stock at the time we got out was telling us that we were wrong.
Dude, they just came in. Their EPS was like double the street estimates.
Yeah,
this guy's doing the circuit. He's on every business news channel today. Ernie Garcia, the insider buying from this guy that really put Carvana on our radar years ago when it was trying to bottom out. Was completely off the charts. This guy basically just helped fund the company through hard times in 2022. And what a tremendous turnaround story. Like, these guys they didn't just survive the bear market. Like, they are absolutely thriving coming out of it.
I can't think of another stock like this. From 44 to 376
the numbers support it
in a year and a half, right?
The fundamentals are there. That's what's crazy.
From 44 to 376 in 18 months, from 376 to 3 in 12 months.
So impressive.
And then from 3 to basically 250 this morning in 2 years. Right, a little less than 2 years. So
at one point they had borrowed so much money it looked like that they were just drowning in debt back at the late 2022 lows. They kept doing secondary offerings and private placements, and he was basically just funding the company, keeping it alive.
Well, you know what, Strazza,
this is just
never seen
when we put the trade on. I mean, the thesis that we had played out, right? We saw the potential for a huge short squeeze. We were right. We were just early. That happens to traders all the time, right? It happened about 4 months later than we expected it to, but we had the right idea.
Yeah, and you know what? With stocks like this, I do this with a lot of the freshly squeezed names because they're just so wild. Like, it's fine. You want to put on some sort of option strategy. You want to buy some calls and really like hope for a big hit. That's great. But like with these, I feel like you got to buy the common too, because they trade crazy. They do nothing. Then they're up 50% in a day. And trying to nail that timing is hard, as the Carvana trade, proved.
Yep. All right, let's do some recess. I got some trades to make.
All right, fine. Jeez.
All right, I'll start since I'm dressed like a clown. Shout out Seattle. I went to Seattle this weekend to see the Bills play. Look at this. Seattle's Bills backers. There were 10,000 Bills fans in Seattle this weekend. 1/3 of the stadium, of the supposedly loudest stadium in the country, Well, you know what? It was loud because the Bills fans were there, and it was loud when the Bills needed them to be loud. It was wonderful. The Bills Mafia got a huge shout out on national TV on Fox, and I was so happy to have been a part of it. Seattle, great city. It was my first time ever there, and boy, did we feel the love, man. Great city, great people, great place.
I don't think I'll ever go there.
Seattle Bills backers. I went to a bar where they had a party on Saturday night for the Bills fans. And I mean, this bar, they were not letting more people in. This bar held 2,000 people. They shut the door down at 7 o'clock, said no more people can come in. It's crazy in here.
You know,
luckily I knew the organizer, so we snuck in the back door. It was insane, man. And apparently that's the bar that they watch every Sunday. 10 a.m. are local time games out there in Seattle normally. And that bar is packed every Sunday. Can the Dolphins fans say that? I doubt it.
Do you think front offices, get their schedules in the offseason, look at it, see that they have to host the Bills at home, and they're like, oh, God. I get it. The Bills fans, you guys aren't like Eagles fans. I think your thing is fun. But, God, that's got to be annoying for the host city, right?
No, they love it, man. We're bringing money. We're bringing tourism. We're bringing excitement. And we're bringing good-natured fans to your town. It's a good time. They love it. They circle that week on their calendar. Buffalo's
of course they do.
Yes.
The best trash talk I ever heard. I went to an Orioles game years ago. I think they're playing. I don't remember who they're playing. They're playing the Red Sox, and it's the end of the game. The O's were about to win, and the Red Sox fans were all leaving, and some guy just goes, "Thanks for supporting our inner harbor," and it's just like waves and goodbye as they leave. Like, thanks for paying your money here. We appreciate it to the local economy. So. I'm sure.
Well, one thing I can say about Seattle is they certainly don't need the economic support. That city's doing just fine. Plenty of money there. But nonetheless, a lot of Bills fans there spent a lot of money. And so I'm sure we were welcomed with open arms. You should have seen there was a organized Bills tailgate right outside the stadium, right next to the stadium. I mean, when I was entering the stadium, I got in a little early, and I'm looking down on the scene of where all those Bills fans were. You would have thought we were in Orchard Park, man. There were just sea of blue everywhere.
Cool.
All Bills
That's
fans.
Very cool.
Good times.
All right, I don't got anything, honestly. I'm spent. I'm emotionally spent after this week. So
sorry about the Yankees, man. That's a bummer.
Yeah.
Yeah.
They've won enough. All right.
I got nothing. All right. So like I said, 3:45 today. I'll drop the link in the chat one more time. There it is. We're talking Amazon. We're talking Apple. We're talking consumer, retail, Jeff Mackey, the whole thing. We got the jam session at noon. Chart Request Live at 1. And that's it. So go make some money, and we'll see you guys later. All right.
Peace.
I can't take no loss. I don't even know